Hey everybody, 15 days left this year, this trading year. I saw this picture a little earlier today. I guess there's some enormous winds going on in Scotland right now. This is a picture. I guess the turbines are going so incredibly rapidly that's actually blowing the generators up. I thought since this was Europe, this is kind of appropriate for what's going on, so mildly amusing. I feel a bit like NPR here, but it seems to me that the only time people click donate is when I mention it. Any donations have been tumbling in now and then, although only when I ask. So if you feel you get value from the site, and sites like this charge about $800 a year, literally, for this kind of content. I charge $0 a year. Click on it and send me whatever you think is appropriate based on these contributions. Anyway, let's look at the markets. Now, this is the euro over the past 10 trading days. I'll point out that the entirety of that disgusting move higher when all the central banks threw open their coffers to anybody who wanted it, the entirety of the move was completely negated by today's low. Isn't that an amazing fact that countless trillions of dollars are made available to any takers at almost 0%, and they're still wide open, but that effort was completely blown to pieces, made utterly irrelevant from the euro's perspective within just a few trading days. That just illustrates, again, how hopeless the situation is and how nauseating it is for these efforts to keep coming up. I guess earlier today, Merkel, I get sick just thinking of it, was talking about how, well, this isn't the last conference. So this always changes. Every time they have a conference, every time they have a summit, it's like, this is the one. We're going to resolve it this time, or this is never going to get resolved. This is the one. And then as the conference winds to a close and nothing's been accomplished, it's like, well, this is just one of many conferences. There'll be stepping stones, and these are incremental steps toward the resolution. You toads. Anyway, so I'm disgusted because I'm so sick of dealing with the nonsense. I mean, this entire year has been nothing but an exercise in enduring the complete crap that is thrown at us from these little summits and the little get-togethers. It's seared into my brain this summer what we had to deal with. Basically, my weekly summer camp was wrecked thanks to this Greek Parliament vote thing. I remember this week so well. Instead of enjoying myself, I was glued in front of a computer trying to deal with these outrages. One day I will learn that these guys are helpless and the whole thing's going to collapse and I should just shut off my computer and forget it. But until then, I'm just going to be a worrywart and wring my hands. Now, having gotten that bit of emotion out of the way, I entered the day with a mixed bag. I had a split of about 30% long, 70% short, the bulk of the long being gold. When the euro was spiking higher up here, gold was doing great. And, the ES was much higher and so forth. So, when it was back here, I was thinking to myself, well, it kind of sucks, again, that everything's going sky high. But I've got my gold. I've got a few longs. That'll dampen the pain quite a bit. And then, of course, this started to happen. I got the hell out of gold when the euro was about right here. Took a very small loss. I don't know the percentage, but minuscule, pretty inconsequential. And I'm glad I got out because gold just got worse through the day. But what had been a smallish profit became a smallish loss, and my percentage of longs got much smaller. And the market opened, and not too deep into the trading day, I decided, to hell with it. I'm going all short again. The dozen shorts I've got, the dozen longs I've got, I'm getting out of. One really poignant example of that is RDN. I dumped RDN and all the others right around here. The others I all took a loss on. RDN actually made a profit on. I was kind of questioning myself a bit, but after I saw this, I questioned myself no longer, because the point and the reason I'm showing you this, it's not for the anecdote. I mean, listen, I have tens of thousands of trades every year. I'm not trying to dissect every one. My point is that in a normal trading environment, you could have made an argument for this being a pretty nice bullish pattern, but you can't trust long positions in this market, and it was right of me not to trust it. And because, again, a small profit became what would have been a pretty big loss in that instance. So I am totally short again, and more than a little nervous about that. Nerves, I think, have been the most expensive phenomena for anybody this entire year. Nervousness keeps our profits much smaller than they should be. Although nervousness does help avoid some losses that might have been bigger. But I guess my general statement is that for a year like this, throwing caution to the wind and just putting your hands on your hips and saying, screw you, the market's going down sooner or later, is probably the right approach, because that's what's been going on. Let's look at a few interesting commodities here. Crude oil had rallied like 50% in the span of about 6 weeks or so. It has been just completely falling away from that trend line, which is good. The precious metals have been incredibly interesting lately. Not just metals, there's symmetric triangles all over the place. I mean, everywhere I turn, I'm seeing these things. These used to be like 1 out of 10,000 charts I see this. I'm seeing them everywhere now. And I suppose what that's saying is that we are more and more tightening up the range. There's still volatility, but it's getting tighter. I'm just waiting for a resolution of some kind. We're still within the confines of this, and we'll escape it sometime soon. So be it gold or silver, seeing the same thing, threatening to break below this. A move downward in precious metals, I think, would be good for us. By the same token, the strength we've seen in bonds, also good for us equity bears. Bonds have had an amazing year, and I think that it could really be off to the races again for bonds if equities start falling as God intended. What else? Just looking briefly at, it's not quite time to roll over to the March contract, so let's look at the December's. The ES we have here. This trend line, see this, I usually don't monkey around with these things, but if we actually, if we pin it down to those two, it actually fits quite nicely. Has not penetrated that upper line. Rather important here, though, at 1223.75 or so. That had been support before. It had been resistance during that just complete trap of prices that we endured for a couple of months. And things have been more uncertain now. It is oscillated above and below this line a couple of times. But, I still think the line is somewhat important. I would also say that if things get hairy, if things start to really fall, that the floor here at about 1100 is pretty dang tough. I don't really hold out any hope for us getting beneath that level this year. I have plenty of hope we're going to get below it next year. Maybe it's the eternal optimistic pessimist in me, but I have great hopes for 2012 for the bear side, because this fraud that's been perpetrated on the world for 3 years, I don't think it's going to survive a fourth. It's going to be a lot of fun. I think watching the politics and watching the movements in the financial markets is going to be the most fun you can have with your clothes on. Let's see. What else? I don't know. Here. I was going to share with you, just for the heck of it, I have 90 short positions right now. Every single one actually was down today. Now, to be clear, I didn't enter the day with 90. I entered the day with something less than that, like, I don't know, 50 or 60. But so all of the stocks, all 90 of them, actually had losses today. And I wondered, what were the top 5 in terms of loss? Which 5 fell the most? I haven't even looked at these charts particularly. But let's take a look at what fell the most and see if I have any comments on any of them. So SGY, this is a nice one. Here we have a stock that moved up from, what is this, like $1.50 up to $35. So giant multi-hundred, maybe a multi-1,000% move. Broke the trend line, retraced to it, fell away, and retraced to this horizontal line right here. Very nice move, and this is the kind of stock which has clearly illustrated its potential to get really, really ugly in a big hurry. So nice move today, closing near the day's lows. With a stock like this, I'm getting somewhat more conservative in my stop setting. I'm tending to set stops like maybe just above this high. I'm not using this so much anymore. That's just too far away. Nor even am I using this. I'm actually, to my way of thinking, if things move above this level, I just don't want to stick around for it. My trust of this market is modest. Car, Avis Budget Group. Again, we had this fantastic drop in this one. We have been floating on hopium up here for years now, and starting to break down a bit. This one, again, I would set the stop just above this point. But this is the kind of stock which, I mean, can you imagine if it broke beneath this line, how wonderful that would be? Do you know how disastrous that would be for this stock? It would be just ecstasy on a popsicle stick. GBX, got a channel here. Busted through the channel at one point, which is encouraging. Another horizontal line, falling away from that. PFG, I think this is Principal Financial Group, yes. Kind of similar to the car company, interestingly enough. Big topping pattern here. And the big payoff, which has, 1, 2, 3 times it's threatened to, but hasn't done it. Just imagine Obama's long fingers holding this up each time. But when it does break, how the mighty will fall. And then finally, USG. This is the 5th biggest drop today. I think, if I recall, this is like US Gypsum. I think this was big during the housing nuttiness. Even before the housing crash, it started to sink. But kind of a nice head and shoulders pattern here with a very clean neckline, retracement to that. And starting to fall away nicely. Here again, something that has illustrated its ability to go into low single-digit land, which is pretty sweet. Okay, well, I'll close by saying that I'm going to make a point of not looking at the markets tonight. I'm going to give myself a break because I can't do a damn thing about it, even if they do something silly. I am, as I said, more than a little nervous. Right now I am a third in cash, which is the smallest cash position I've had in weeks, I think. Otherwise, entirely in shorts, a great many of them. And cynic that I am, I figure that one of those jackoffs in Europe will announce a $20 trillion bailout package or something, and it'll be 500 pips up on the euro and gain 700 on the Dow. God knows. This market, I'm delighted with how today went, but I still say this market sucks, and everybody hates it. So on that cheerful note, I'm going to spend the rest of my day doing family stuff, and I'll see you on Friday. May it be a down day. You hear me, Jesus? Thanks.